How is depreciation recorded in the firm's financial reports? In the income statement, it's easy. We just whack it down in other expenses, e.g. with wages or rent or insurance. In the balance sheet, it's a little more complicated. What we're going to do is record it under the non-current assets section, and we're going to list three things. The cost of the asset, which is the historical cost, and we defined that in a previous presentation as the purchase price, plus any cost required to get it in a capacity and location to earn revenue that will last for the provide an economic benefit for the life of the asset. We're then going to record the accumulated depreciation, so that's the total amount of depreciation charged during the life of the asset so far, and that leaves a carrying value. So looking at an example, let's say we had a $10,000 vehicle. In the first year we depreciated $2,000, so the accumulated total is $2,000. That leaves $8,000 of economic benefits remaining, which we call the carrying value. In the second year, the cost stays the same. We apply the historical cost principle. We depreciate another $2,000, so the accumulated total is $4,000. That leaves a carrying value of $6,000. In the third year, the cost remains the same. We add $2,000 to depreciation to give us a carrying value of $4,000. In the fourth year, the cost is the same. We've now depreciated $8,000, which leaves a carrying value of $2,000. And in the final year, we've got a $10,000 vehicle. We've now consumed or used all of it, so accumulated depreciation is $10,000. That leaves a carrying value of $0. Looking at it as a graph, you can see each year the accumulated depreciation represents the used part of the asset, the economic benefits that have been consumed, and that's recognised as an expense. So the other part, the carrying value, must be the unused part of the asset. That'll represent the future economic benefits, and we say that's the amount the asset has been carried at on the balance sheet. In the second year, we depreciated $4,000 of accumulated depreciation, leaving a carrying value of $6,000. So $6,000 hadn't been used yet of the car. And in the third year, we're adding another $2,000. And you can see each year we'll get to a point by the end where we've actually either used up all of it or maybe there's some left over. But we can see each year we're using a part of the asset, which is called the accumulated depreciation, and there's some left over, which is called the carrying value. Using an example, let's say we've got a vehicle which costs $15,000. It's got an estimated useful life of 3 years and a residual value of $3,000. Putting our numbers in to our formula, we get a cost of depreciation of $4,000 every year. So what would that look like in the balance sheet? Well, we'd record the vehicle at $15,000 cost. In the first year, we depreciate $4,000, which leaves a carrying value of $11,000. In the second year, we leave the cost at $15,000. We depreciate another $4,000, which means we've accumulated $8,000 of depreciation, and that leaves a carrying value of $7,000. In the last year, the cost is still the same, but we've accumulated now $12,000 of depreciation, which leaves a carrying value of $3,000. Why is the residual value subtracted when calculating depreciation? So why are we doing that? Well, it's basically because that's the part we're never going to use. So because we're never going to use that part, we're going to sell the asset for $3,000. We shouldn't be able to depreciate it. So that's why the part on the top line of the depreciation equation is called the depreciable amount. So looking at the asset's total cost, in this case we reckon we're going to be able to use $12,000 of the asset, which is called its depreciable amount. There'll be about $3,000 of it left at the end, and that's what we'll be able to sell it for, so we call that the residual value. So the part up the top is basically the asset's economic benefits that will be consumed, and the residual value represents the economic benefits that will never be consumed. We're going to sell the asset before we consume them. The residual value therefore represents the amount that will remain unused of the asset. The business will never ever use those economic benefits, hence we don't deduct them as an expense, and we use that as the amount to sell the asset for.